observers, welcome back. So today we are diving into this market crash. Look at all that red. Wow. Can't say that we didn't see this coming. We've been talking about the $6,000 Bitcoin for quite some time here. I gotta say today, I'm even almost willing to say we're probably gonna close the year out with a $5,000 Bitcoin. And I know that is, not the most optimistic point of view, but it's okay. We came into the year at 3,000, so closing out at 5,000 is still going to be, in the profits if you got in at the right time. Now, if you got in at 13,000, all I can tell you right now is hodl. I do believe we will see Bitcoin at those highs again, and it will surpass them. It's just gonna take time. This market's not going anywhere. So for those of you that are like really scared and you constantly taking your money out, putting your money in, and actually experiencing a lot of loss here, you really just got to calm down and look at the long term. This market's not going anywhere, and regardless of speculation, if you just hang in there, you hodl, HODL, I think you'll make it. So what caused this? What's got these prices going down? And what's going on in the background? Well, let's find out here on Crypto Observers. First up, I want to talk about what others are speculating is happening, and then what I kind of think is going on in the background. So, Chainalysis report on Plus token scammers blamed for Monday's crypto sell-off. And there is apparently a Ponzi scheme Plus token that's been going on. I love how when they report on these things, it's always like Plus token Ponzi scheme. Like they've always known that this was a Ponzi scheme, and it's just been happening. And I don't know. I just feel like if that was the case, why wasn't it reported on sooner? As Bitcoin and Ether prices fell below technically significant levels, some traders are citing fear emanating from a report about the alleged Plus token Ponzi scheme as the reason for the plunge. In just 7 minutes, Bitcoin slipped 4% to $6,800 from $7,085, according to data from Coinbase. In that time, Ether took a bigger hit, dropping 7% from $140 to $130. And folks, it is ugly, but we are now seeing a $128 Ethereum. All I can say is get you some cheap crypto. With little news to go on, the markets found at least one culprit. Chainalysis' new report, published nearly 4.5 hours earlier in the day, saying 20,000 BTC, now worth $137 million, and 790,000 Ethereum, now worth $102 million, remain likely controlled by Plus token scammers. Further, Chainalysis claims $185 million in stolen Bitcoin have already been liquidated by individuals related to Plus token. 6 people tied to Plus token were arrested and extradited to China from Vanuatu, where Beijing claimed the company operated a Ponzi scheme. Chainalysis said it was able to track down $2 billion in cryptocurrencies taken from victims, with a lot of that going to other investors. The arrest occurred a little more than a week before Bitcoin reached its 2019 peak of $12,575.90. Since then, the cryptocurrency, which represents the lion's share of the sector's overall market cap, has drifted downward. While Chainalysis wouldn't say for certain that liquidations from Plus token related accounts sunk Bitcoin's price, the blockchain forensics firm was willing to claim that those cash outs caused increased volatility in Bitcoin's price, and that they can correlate significantly with Bitcoin price drops. A trader at an over-the-counter cryptocurrency broker attributed Monday's steep decline to jitters that more of Plus token's ill-gotten Bitcoin and Ether was going to flood the market. Okay, that's interesting. I don't necessarily think that there is one contributor to the decline in price. Obviously, it's fear. Obviously, it's FUD and people getting overexcited about things like this. So This is another article from News BTC. Is basically going into the Plus token scam once again, saying that they have over 2 billion in Bitcoin and they're dumping stockpiles from their anonymous accounts. And recently, apparently, several of the or 3 men involved with this Plus token scam were arrested in China. So let's see if we can find some information about that. So this is just going further into the Plus token sell-off. The latest Bitcoin crash took the cryptocurrency's rate down by close to 4%. The wild move downhill accompanied a sudden spike in volumes, validating an interim breakout that News BTC predicted in one of its analyses. Everyone predicted it. Chain analysis noted that Plus token had so far crashed out at least $185 million worth of Bitcoin via OTC desk. Their cash out strategy, therefore, could have either manipulated the market dynamics directly or have indirectly changed the perception of traders towards Bitcoin. We can say that those cash outs caused increased volatility in Bitcoin's price, and that they correlate significantly with Bitcoin price drops, added Chainalysis. But the most fearsome takeaway remains the scammer's likelihood of continuing the price dump. Chainalysis study shows that the entity still holds a massive stash of Bitcoin that it might liquidate at a later stage. That raises the prospects of more price crashes unless there is an adequate demand to match the scammer's supply flow. So, I mean, we've got futures being shorted in America. We've got scammers like this selling off large supplies of Bitcoin. So, I mean, there's a lot that is causing the market to fluctuate right now. I don't see. Oh, let's look at this. Further declines for Bitcoin. Overnight declines in the Bitcoin market come at a time when investors' appetite for haven assets is decreasing. With a more appealing stock market attracting capital, investors could ignore chartering into a wildly unregulated Bitcoin industry. The presence of scammers like Plus Token highlights the issue relating to the lack of regulation of cryptocurrency firms. That being said, only a Braveheart institution would expose itself to the underlying risks that come with a Bitcoin investment for now. And I want to really focus on that for now, because yeah, the stock market's doing well, but if you also look into what the Fed is doing right now, they are pumping a lot of money into the market. They're essentially just creating more money right now. So when that stops, when the market tips over itself, as far as stocks go, as far as the Dow goes, then we'll see a lot of those safe haven investors returning to cryptocurrency. So again, patience, my friends, and we can jump into why I think, or what I think is actually causing this price drop and what will cause a continued price drop. With X's backing, China looks to become a world leader in blockchain as U.S. policy is absent. In October, Xi gave a speech saying China needs to seize the opportunities presented by blockchain in what appeared to be one of the first instances of a major world leader backing the tech. Over 500 blockchain projects have been registered with the government. Experts say China could define the technology if it's able to take a lead, which could be dangerous. And so this is an article from CNBC.com. It was actually just published December 15th on Sunday. China is poised to take the lead in blockchain after it was given strong backing by the country's leader, President Xi Jinping. Experts told CNBC the move could allow the world's second largest economy to control the development of the nascent technology in the absence of competition from other regions like Europe and the US. So while the US is barely getting its shit together and trying to charge us double taxes on our cryptocurrency gains, trying to basically snuff out the little guy, China is making headway and essentially promoting this technology and allowing their citizens to develop it, not necessarily freely. Obviously, they're still you know, I'm not restrictive, but they are allowing this technology to grow. Blockchain refers to a technology which began with the cryptocurrency Bitcoin. I'm sure most of you know, but for those of you who don't, let's read a bit further. In that case, its role was an immutable and tamper-proof public ledger of activity. It was also decentralized, which means it was not owned by any one party. The definition of the technology has since evolved as it started being applied to areas like finance. Other terms such as distributed ledger technology Other terms, such as distributed ledger technology, or DLT, are now often used in these cases, and they bear differences to the original Bitcoin blockchain. But the promise of a system in which transactions can happen across a single record aimed at authentication is still attractive. In October, Xi gave a speech saying China needs to seize the opportunities presented by blockchain in what appeared to be one of the first instances of a major world leader backing the tech. Xi said blockchain is an important breakthrough in independent innovation of core technologies. That is an extremely significant development, not just for China, but for the broader world. Garrick Heilman, head of research at cryptocurrency exchange and trading platform Blockchain. So essentially, Xi is given the green light for the citizens of China to move forward, the investors, the developers, to move forward and really build out new use cases for blockchain. This is important because China is actually one of the leading producers of Bitcoin. And when I say producers, I mean miners. Changpeng Zhao, China wants to control mining. If you're not familiar with Changpeng, he is the CEO of Binance. Above 60% of mining activity and block discovery is currently concentrated in China, and the government favors the activity. So this is coming from CryptoVest.com, posted on December 13th. The Chinese government deliberately favors Bitcoin mining and may actually want to centralize the activity and control the network, commented the CEO of Binance, Changpeng Zhao. Mining is highly encouraged in China now. They hope to control Bitcoin by having all the miners in the country under their control. And that's again from Binance. Zhao's statement was all-encompassing, essentially suggesting China may want to centralize Bitcoin mining. Currently, this is not far from achievable, as more than 60% of block discovery is happening within Chinese pools, based on local ASIC farms. China also has one of the lowest break-even prices for Bitcoin, while other miners may need to sell it at much higher BTC prices to break even. Miners are one of the essential parts of the network, and they are also notoriously difficult to control. So, Zhao from Binance is basically stating that it appears that the Chinese government is pursuing control of the miners in the China region. Not only are they pursuing control, but they're essentially giving them the ability to continue mining. So there's a couple things you need to take into consideration. One, mining is cheaper in China. So if there were a U.S. farm or a United States farm that's attempting to mine BTC, they're going to have a much higher break-even point than a Chinese miner would. So let's say that an American farming operation is going to break even or make a profit at a $6,000 Bitcoin. And that's really as low as they can see the price go without losing money. Whereas in that very same scenario, a Chinese farming development can remain profitable with as little as a $3,000 Bitcoin. And so that's really big, because it's really important to understand, because that means that if they control 60% of the mining and they can be operational at a $3,000 Bitcoin, there is no, Bitcoin at $7,000 is overpriced in that case. That means that we could see the price run down to as little as $3,000, and those people are still going to be making profit. So It's highly likely that if China is, mandating control over these miners, that if China is cracking down on these Ponzi schemes, let's say that the Plus token is a scam, for instance. Let's say that China perhaps took over that Ponzi scheme, or the government is now in control of it and selling off the Bitcoin that's been kept in reserves by those companies. They could drive the price down as low as $3,000 and still remain profitable. And I think that's something that we really need to take into consideration. And I think that's what we're seeing happening, because if they drive that price down, they're going to push out the United States miners. They're going to push out miners in other countries where it's more expensive, and those miners are going to shut down their rigs and have to take a break until the price returns to a point where it's profitable again, at which point China will have full dominance in the market. China's mining dominance. And this is just more to go into how China is rapidly taking over the mining economics. A new report has found that nearly 65% of the Bitcoin hash rate originates from China, meaning that China has dominated Bitcoin mining more than any other country this year. 2019 has been a relatively good year for miners in general, generating 5.4 billion in total revenue. And China has consistently been a major market for Bitcoin miners due to its cheap electricity and affordable resources. Companies like Bitmain, F2 Pool, and Canaan, which account for a larger portion of the Bitcoin network's hash rate, are all based in China. Following Chinese President Xi Jinping's call for increased efforts in blockchain development, China essentially unbanned Bitcoin mining in the last quarter of this year. Crypto markets. Bitcoin, which started the year at around $3,500, soared to well above $10,000 this summer before crashing back to trade around $7,000 amid fears that Facebook's planned cryptocurrency project could cause central banks and regulators to take action against crypto. I don't really know if necessarily any of that's going to happen with Libra. I think what we may see happen is Libra finally be released to the public, and main portion of the public experiences Libra. They adopt it, they utilize it. It opens their minds to cryptocurrency. They start utilizing maybe 2 or 3 more per person, different cryptos for different things. And I think that once we're at that point, we'll see, some really great prices on the market, some stabilization, some true trust from the consumer. And another thing I just want to touch on from this article, and this is from Forbes.com, and I just want to touch on a couple things they added: enterprise and blockchain 2020. Let's just dive in here. Health insurer Anthem is using blockchain to help patients securely access and share their medical data. So I'm sure you've heard Mindy and I talk about this before on the channel, the potential of using blockchain to store medical data or to store patient data, and how that could revolutionize the future and make everyone's information accessible by not only their primary care physician, but any doctor they visit, and also the patient themselves. And so apparently this is happening. Health insurer Anthem, that's a pretty recognizable name. The company plans to roll out a new feature currently in pilot testing now, which lets users open an app on their phones, scan a QR code, and instantly grant different healthcare providers access to their health records, but only for a limited amount of time. As soon as the appointment is over, users can revoke access and make their medical records private again. So this is really what we want to see from blockchain, is giving us control of our data. Just the other day, I needed to get medical records from a doctor, and they were unable to provide them to me, for an undisclosed reason. And I believe that's actually against the law, and they have to disclose my medical records to me, the patient. So it's nice to see that there's an opportunity for us to turn that around and take control of our information, and then we can provide access to it when we desire, and also for a limited time. So I'm going to definitely expect to see more development like that on the horizon, and a lot more companies using technology like that to give power back to the consumer in order to gain that consumer trust. Blockchain 2020, just going further into the Forbes article here. Bear market or not, 2019 was a banner year for blockchain tech. We saw the birth of new alliances, new cryptocurrency trading products. Bitcoin and Ether survived the bear market, and a plethora of blockchain protocols matured and expanded in growth. But what does 2020 have in store? We're looking ahead to the launch of China's central bank digital currency, developments surrounding Libra's launch, the progression of Ethereum 2.0, and more. So there are a lot of new projects entering the space. Whether or not they'll survive, who knows? I know that the best place to find out is going to be right here on the Crypto Observers channel, where we dive into cryptocurrency and all the new emerging tech as the future continues to change. It's been another great episode with you guys. Really appreciate the support. Continue to watch, leave a like, subscribe, and we'll be back soon with more great content for you.